What's your thoughts on this? So, in regards to interest rates, like I seen a chart online that puts it puts all of the interest rate hikes, all the interest rate drops, and all the times where they were just like flat on a chart, color coded, and what the S&P did. And it's actually like when the Fed is printing money, markets were dropping because it's like people are looking at it like, oh, the Fed only prints money when there's a panic, so shit must be effed up, so we're gonna drop. But when they're actually raising rates is when the bull markets were happening. So it's kind of just like, man, it's like the opposite of what everyone is saying. What's your guys'
Yeah.
thoughts on that?
So it's interest rates are is interesting because yes, and throughout history you've actually seen downturns on rate cuts because of the narrative surrounding those rate cuts. But as a correlate to assets, that on the flip side increases liquidity because it makes the cost of capital a lot cheaper. And so
It
obviously
increases
that
liquidity
allows
when the rates
more
are raising or dropping.
what you say?
It increases liquidity when the rates are being
Dropping.
okay.
Dropping. So as capital is becoming cheaper, and so now people are obviously willing to borrow a little more, even though the macro narrative may be on the negative side. And so obviously during those times, it's more appropriate to use leverage because if you're borrowing at a lower interest rate, for example, 1%, and I could generate 4% or even 3%, shit, in a lot of cases, 2%, that still is worth it for me to invest in this asset using my leverage. And so, from a liquidity standpoint, yes, it could help like certain risk assets like Bitcoin. Um, but yeah, on the flip side, the stock market does do poorly because usually the Fed is cutting rates. Like they're not cutting rates in good times. Like that just doesn't happen. So things that are bad are happening. And that's what forces them to cut rates. And that's why people are projecting, rate cuts out in like Q2 of 2024. I don't know about that, but they believe we're going to get, something near a recession that time. And it'll force the Fed's hand to bring rates back down, which I think will be a mistake. So I could see that as a potential catalyst from a liquidity standpoint, for sure. But overall, like equities, not really. And I think we're going to see that again, what you just said there. And yeah, the ETF and the halving is not going to have as much of an effect as it used to either. I think the biggest catalyst is definitely going to be an ETF, the ETF, not an ETF, BlackRock's ETF specifically. I think once that happens, that brings capital in that we didn't even know exist.